daily market commentary for Tuesday, the 30th of July, 2019. Well, Monday was a fairly quiet start to the week for crypto and for FX and across all markets, really, with only sterling providing a bit of relief and a bit of movement. Tuesday started off in a very similar fashion. Crypto probably had one of its quietest sessions for a very long while, with BT stuck around the 9,500 level and ETH around the 208, 209 area. A little bit later during the US day, we got a very brief flurry of activity, seeing Bitcoin up to 9,700 and ETH up to 212, but not a lot behind it. And not much else to say about crypto on the day. Familiar ranges, familiar levels, and a market that clearly doesn't know which way to go. Onto FX, bit of a case of deja vu here, really. Sterling suffers once more, falling all the way down to a low of 121.20, just shy of the major support I highlighted yesterday at the 121.08 level. Increasing concerns for a no-deal Brexit are constantly weighing on the pound at the moment. Yesterday's meeting between Prime Minister Boris Johnson and Scottish First Minister Nicola Sturgeon highlighted how much division there is within the UK. That Scotland very much wants to remain part of Europe, and you wonder how long it will be before there was another referendum for Scottish independence. But for today, as the day progresses, sterling does get a little bit of relief, bounce back up to 121.80. Probably a few people taking a little bit of profit on some shorts ahead of the Fed meeting tomorrow. And as I mentioned then, just with the move having stopped short of the major support area. Some rather brash comments from President Trump. That was a shock. Had US stocks opening on a negative footing. Obviously wasn't very happy with China in their trade negotiations and making their efforts to buy US agricultural products on this occasion. That saw US stocks open lower, took dollar yen down to 108.45. We had Aussie breaking 69, taking us down to 68.70, and dollar CAD pushing up to 131.92. Euro continued to kind of frustrate the bears a little. We were staring at the 111 figure level last week, and with the ECB, I think a lot of people thought it was going to break. It hasn't yet. We've got to squeeze up to 111.60 today, in what I could probably only describe as pretty quiet trading. Once euro goes home, equities start to rally back a little bit, and dollar yen's back up to 108.65. Dollar CAD back down to 131.55. But overall, not particularly exciting. Be fun, and one assumes volatility will no doubt occur tomorrow. When I say tomorrow, I mean Wednesday. 2 p.m. Eastern Standard Time is the time for the Fed rate announcement, and then obviously some comments that will go along with that, with regards to future movements. For today, equities closed a little bit lower, with the Dow Jones down about 23 points, the Nasdaq and S&P both down about 0.25%. Although the Russell Index, which I've mentioned a few times, which is made up of small cap stocks, was up almost 1% on the day. Gold rallies to $1,432 an ounce. Again, really just ahead of the Fed tomorrow. Gold always benefits from a lower interest rate environment. And to end the day, we had some results from Apple, which came in better than expected. We saw the sort of stock rally about 3% after hours, and that normally bodes well for the broader market. Although obviously tomorrow we've got a lot more to focus on. So moving on very quickly to a technical picture. What you have in front of you here is it's a Euro Aussie chart, a 1 hour Euro Aussie chart, and I wanted to bring it up. It's a crossfit I haven't really focused on before. But often you get quite a bit more sort of bang for your buck looking at the crosses, other than just purely looking at your chosen currency against the dollar all the time. So always good to go and scan through the charts and see what you can find. And this is a prime example of that. what we have here is a fairly interesting chart pattern. You know, a couple of weeks ago, we probably had Aussie making, well, we thought Aussie was going to break higher when it was trading above 70.5 against the US. And then we literally had 9 straight days, including today, when the Aussie's gone down against the US. What we have here is, a fairly well-defined head and shoulders formation in Euro Aussie. We've got the shoulder here, the head here, shoulder here, and you can kind of say this is the neckline here. Now, you would have been, if you were short at this moment in time and you saw, 1, 2, 3 attempts here to go and break that neckline, you probably would have been very excited thinking it was going to go lower, but it didn't. It held. And what we see here is a move up today, up to the top of the second shoulder, and it's your guess is as good as mine as where we go. But from a typical failed head and shoulders formation, you would normally expect us to continue up here. Whether we will or not, I guess remains to be seen, but worth keeping an eye on, because this is a pretty good formation here, over, going back, I guess, to middle of May. So over a course of 2.5 months. So let's keep a little bit of an eye on that one going forward. And with that, I wish you all the very best of luck, and I look forward to speaking to you all tomorrow once we have got the Federal Reserve meeting out of the way, and all the good stuff that comes with it. Speak to you then. Cheers.